Are we on the edge of a major market shift?
Today, we bring you exclusive insights from renowned experts like Jason Shapiro and Kathy Jones, covering crucial topics from market tone to inflation forecasts.
And the best part? All key points are boiled down into digestible segments, saving you time.
Exactly. Discover what inflation predictions mean for your investments and how to adjust your strategy accordingly.
Welcome to Financial Insights in Minutes, where we provide essential financial summaries from top experts for busy investors.
Later in the video, we tease insights from Jason Shapiro on price action and market tone, focusing on trading strategies amidst evolving market conditions.
In today's analysis, Jason Shapiro discusses the critical concept of market tone and its influence on trading strategies. Get ready for some eye-opening insights.
Jason emphasizes that understanding market tone is essential. It's all about how the market reacts to news.
What's Jason's main thesis about market tone?
He posits that a shift in how the market reacts to good news can indicate a bearish trend, raising concerns for traders.
That sounds like a critical observation. What evidence did he provide for this?
He noted recent economic data that typically leads to positive market reactions, but instead resulted in a swift decline.
Let's break down what market tone means. How does it specifically impact trading decisions?
Market tone indicates whether good news causes rallies or whether the market reacts poorly to bad news.
What about recent market events? How did these shape his arguments?
The recent GDP and earnings data were expected to rally the market, yet it closed down, a clear sign of changing market tone.
What was revealed about the bond market?
Jason pointed out that despite a rate cut, bonds dropped, a significant departure from expected behavior.
What predictions did Jason make regarding market trends?
He anticipates increased volatility as the market struggles to find stability amid shifting tones.
So, if traders are not careful, they could face some serious challenges ahead.
Definitely. Misreading the market tone could lead to significant losses if strategies aren't adjusted.
To wrap up, what takeaways should traders keep in mind?
A keen awareness of market tone is essential. It can dictate short-term strategies and longer-term planning.
Sounds like a strategy grounded in adaptation and awareness is key to navigating future markets.
Absolutely. You need to stay agile to react to the signals the market sends.
As we gear up for election day, the market seems trapped within a tight range. What are your thoughts?
Absolutely. It's like a waiting game right now. Everyone's holding their breath for the electoral outcomes.
What do you think will trigger movement today?
Well, it might hinge on the reaction to the results as they come in. Traders are likely to react emotionally.
Traders really seem uncertain. What impacts might that have on trading today?
Fear of the unknown could lead to erratic trading patterns, especially if results are delayed.
How do economic indicators play into this?
They're secondary right now. Traders are hyper-focused on election news, which is driving the market.
Looking ahead, what are the predictions for market behavior post-election?
If results create clarity, expect a rally. But if there's confusion, like in past elections, we might see a sell-off.
What if the election results don't come in clearly?
That could spook investors, leading to significant market declines.
To wrap it up, what should traders focus on as we approach election day?
Being prepared for anything while managing risks is key. Volatility could define today.
In this eye-opening discussion, we unravel the complexities of the yield curve and what it might be signaling about our economy.
It's fascinating, isn't it? The yield curve seems to be doing its own thing lately, doesn't it?
What does this strange yield curve behavior mean for the economy?
It's steepening, which is often a recessionary signal. Quite paradoxical when short-term rates are dropping.
Right. It's almost counterintuitive. What could be driving these shifts?
A lot of uncertainty in the bond market, reflecting broader economic fears.
Let's dig into the dynamics of the yield curve. What are we seeing?
A classic yield curve steepening, which typically accompanies recessionary conditions.
Interesting contrast, right? Short-term rates are plunging, yet long-term rates are skyrocketing.
Exactly. This divergence is noteworthy. It suggests different perceptions of risk and economic outlooks.
Now, you mentioned historical parallels. Can you elaborate on those?
Definitely. In 2001, we observed similar yield behaviors before economic downturns. History seems to be repeating.
What should we be watching for next?
Keep an eye on economic indicators. The steepening yield curve often signals trouble ahead.
As we conclude, What key takeaway should viewers keep in mind?
Vigilance is crucial. Monitor the yield curve and adjust investment strategies accordingly.
Staying ahead of market signals seems vital in these uncertain times.
Absolutely. Knowing how economic cycles interact can guide better decisions.
In today's episode, we're shedding light on one of the most secretive institutions in global finance, the Bank for International Settlements, or BIS.
Yes, it's often referred to as the Bank for Central Banks, and its influence is profound, yet largely hidden from the public eye.
So Adam, what is the core thesis of your book regarding the BIS?
The core argument is that the BIS, while claiming to foster global financial stability, has a history of operating without accountability, influencing both the past and present financial systems.
Your research covers some dark periods, especially the BIS's dealings during World War II.
Absolutely, the BIS's collaboration with the Nazis raised serious ethical questions that still resonate today.
With the rise of CBDCs, what are the implications for everyday consumers?
The introduction of CBDCs could lead to enhanced surveillance of transactions, diminishing consumer privacy.
Let's discuss Project Enbridge. How is the BIS involved?
The BIS is playing a crucial role in developing this multi-CBDC platform to enhance cross-border transactions.
Do you foresee a global monetary reset on the horizon?
There's a possibility as nations increasingly explore alternatives to the dollar and seek stable assets like gold.
So what is the takeaway for viewers regarding their financial future?
It's crucial to remain informed about these developments as they affect our financial independence and privacy.
Today, we're unpacking Kathy Jones' insights on interest rates and the economy's trajectory. Hold on to your financial hats.
Kathy's perspective reveals how economic performance will dictate the Fed's monetary policy and interest trends.
What's Kathy's main thesis regarding the Fed's next moves?
She believes the economy is chugging along, making aggressive rate cuts less likely as inflation stabilizes.
So the backdrop of economic resilience could significantly shape future rate decisions.
Exactly. Kathy points to details like the labor market's solid performance as key indicators.
Let's delve into the economic growth numbers. 2.8% GDP rise sounds solid, right?
Absolutely. Consumer spending is a massive driver, which typically signals healthy economic activity.
What's the forecast on inflation? Is it stabilizing?
Kathy expects inflation to hover between 2.5%, which is manageable for the Fed.
And how's the labor market looking?
Kathy sees stability in unemployment, which is crucial for economic confidence.
How might the upcoming election shape our economic policies?
Policies could sway depending on which party gains control, affecting fiscal strategies.
What about the interest rates? Where do they stand?
Kathy forecasted possible rate cuts by 2025, contingent on economic performance.
Kathy's predictions on interest rates are compelling. What's the key takeaway?
She suggests a cautious approach from the Fed, possibly cutting rates if the economy falters.
And what's the global economic picture look like?
The strength of the dollar is tied to the U.S.'s superior interest rates. Other economies may affect it.
So, what should viewers take away from this discussion?
A sense of cautious optimism. While growth looks strong, the interplay of fiscal policies could change everything.
It seems that staying informed on both economic and political fronts is crucial.
Exactly. Awareness of these factors lets investors navigate potential changes effectively.
Today's deep dive features Sven Henrich, known for his sharp market insights. What should we expect as we move towards the end of the year?
Thanks for having me back, Adam. The market is showing signs could lead to significant volatility.
What's your take on the current market outlook?
We need to be cautious. A lot of liquidity is pouring in, but market valuations are very stretched.
What does that imply for investors?
Investors must be prepared for potential corrections, especially around election time.
We're seeing insane valuations. What's your take?
Absolutely mad. The market isn't cheap, and this should concern investors.
What should we expect in light of the upcoming U.S. elections?
Expect volatility. Any political uncertainty can lead to market corrections.
Liquidity seems to be supporting the market, but will it last?
As long as government spending persists, liquidity will keep the market elevated.
What kind of corrections should we anticipate?
Potentially a 5 to 10% correction, given current conditions.
How might global economic factors influence the U.S. market?
Global liquidity pressures will definitely affect our markets. We need to be vigilant.
To wrap it up, what should investors keep in mind?
Be ready to pivot. Vigilance is key in these uncertain times.
Good advice. Staying informed is vital.
Exactly. Knowledge is power in this market environment.
We've had quite the discussion today, unpacking various insights from our financial experts, haven't we?
Absolutely. Each guest brought a unique perspective, from Sven Henrich's caution on potential corrections to Kathy Jones's optimism about economic resilience.
And let's not forget Adam LeBor, who highlighted the importance of transparency in global finance as it relates to CBDCs.
Right? And Jason Shapiro's take that positive news might not boost stock prices like it used to was a real eye-opener.
Plus, Jeff Snyder's analysis of the yield curve presenting risks of a recession was quite a stark reminder of the current financial climate.
Wonderful insights overall. It's crucial for our viewers to stay informed about these trends as they plan their strategies.
If you found this discussion valuable, make sure to like this video and subscribe to our channel. Your support helps us continue delivering top-notch insights.
Thanks for watching, and don't miss our upcoming videos that dive deeper into these pressing financial topics.